Hello, welcome to this video for the High Velocity Market Master. In today's video, what I wanted to do was cover some Forex trading, always a market that's extremely popular and works very nicely with the High Velocity Market Master. There are a few keys with Forex trading. Obviously, you can trade these markets 24 hours a day, but certainly you do not want to trade these markets 24 hours a day. So what we do when we day trade is we break the session down into a very small subset of hours. And in the case of the chart you're seeing on the screen here, the pound US dollar, that tends to be the European session hours, which at the earliest is about 1 a.m. New York time. Usually on a Monday, though, a Sunday, Monday, we try to start that a little bit later because it takes a little bit longer for that market to get going, until about 5 a.m. New York time. And then if that's just not a good time for you, which of course if you're in the US, it's probably not a great time. If you're overseas, outside of the US, it can be a very good time. Then we have, instead, the alternative is the US session, which runs from 7 a.m. New York time to about 11 a.m. New York time. So this is just one time frame of many that's possible. Of course, there's a number of different pairs, and I'll just walk you through this morning just so you can kind of see the most recent activity, starting with an entry right about the 7 o'clock time frame. And a couple things, if you've been learning the method, you can see this indicates the little plus sign here. That's where our short set up, and in this case, that was about 1.6298. Okay, and everything's very exact. You see the smaller set of dots here? That's our money management, and that's where we will go ahead and obviously reduce our risk quite a bit. And then down here, the little larger set of dots is our profit target. So we go ahead and we get short on that one. Actually, we come in at 7 and get short right in here. We had a chance to kind of grab the short, and the market moves down and gets a pretty quick move into the full target. You can see we came close here, had a retracement, and then we had that final nice wave lower. So at that point, we're currently picking up 15 pips, and we can look for our next trade setup. So you can start to see here there's a potential buy, but a short comes in a bit later, and that cancels out that potential short. The potential buy. So we're just going to be looking at a potential short, and now I go back to a long entry. So we'll have that sometimes where we might have a setup that doesn't trigger, and then a new setup, but that's good news because it means that you're sort of handling the chop in the market. You actually kind of want to see that. So you can see right here, I go ahead and I go long, and you notice I had the exact entry in advance. It wasn't as if I needed to jump in and take a guess. Once I'm in the market, it immediately projects for me the money management level and the take profit level. Okay, so I've got those. Now I just need to manage the trade on both the loss side and the profit side. This one doesn't take long at all. As you know, sometimes the Forex can kind of take off like a rocket, and we quickly pick up another 14 pips. And really at this point, we're only about 25 minutes in, and we've got our 2 wins. And if you follow one of our teachings, which is called the power of quitting, we actually would be done at this point, at least with this currency pair in this time frame. But just to give you an idea of what, let's take a look at least another trade just to kind of get the hang of it here. Let's kind of scroll forward. You can see a possible short developing down here, all right, at that point. Possible, a new long developing. Nothing on the short side, and this is the one thing they will teach you, is that when we have a short inside what we call, this is our profit line, it's one of our filters. So no matter what happens there, I'm not going to take it. Even if it works, I'm not taking it. That's a rule that we have. All right, so scrolling forward, and now you can see we get a brand new setup. Now, you might say, well, why didn't we get long here? Why are you getting long here? Because in between, I had another potential short setup. So I don't like to have a long and a short at the same time. It's one or the other. So once this short came, I canceled the buy. But that short got canceled, and we went with this long. So now I've got my exact entry and my projected targets. And we get a nice move, as you can see, up to, and that's actually a pretty perfect move right there because it goes right to the target, and we book our gain. All right, let's take a look at the Euro-Yen and see how that one behaves. Very similar. This time I'll look at a tick chart, so we'll look at something a little bit different. Okay, so here we have the Euro-Yen. I'm using an 89 tick. There's many different time frames you can go with. This is not like the the rule that it has to be this time frame. If you go with a slower time frame, you'll have bigger projected targets. Of course, your risk will be up a little bit. You don't want to go too small either because you're going to have to pay spread, and we don't want spread to be a big deal in our trading. Now, granted, we see before our 7 o'clock start, here's a nice long to target, and that's fine. I don't care. Okay, one of the things you really need to learn as a trader is not to worry about things that happen during times that you should not be trading, because the odds are not as stacked in your favor as they are during the time frames that we outlined for you. So I'll be looking for my first opportunity to go long, starting at the 7 a.m. New York time. And I'm going to go ahead, I'm going to get that set up right here. And you can see I'm going to go long. I'm going to have my money management and my targets even further up. So projected on the screen. Now I kind of have my result here. You're going to see what's going to happen, but we're going to do pretty well for a while with this trade. You can see I made a really good attack towards my money management level. I would have at that point reduced my risk quite a bit. I was able to reduce my risk some on this trade, but ultimately I'm going to end up getting out with a 13 pip loss on this trade. So we had a pretty good run there. It just wasn't far enough, and you can see we kind of had a lot of chances here up and down. And we were definitely positive this whole time, but I just didn't have anything that told me that I really have to get out, that that's the end of the move. It was a good size move, but it just wasn't there for us. All right, so now coming back the other way here, kind of take a look at the trades. And you can kind of see we're kind of going back and forth, and and you can see here you might be saying, okay, well, where's the entry? Well, there it is, right there, right, 153.58. Let me go ahead and put the arrow down. Okay, so we got the setup. You can see it's set up back here. It took a few bars to trigger, but it's not a lot of time. That's about, in this case, about 15 minutes. But the whole time I had that exact entry. As soon as it triggered, immediately I had a projected target. Money management and a target level. Now, a few good things happen in the trade, and there's typically a process that will happen when you trade. The first is I was able to spike down to my money management level. Okay, so I was short from here. By coming down to this level, I was able to reduce my risk quite a bit. At that point, my stop was just up here, and I was looking at less than a 10 pip risk, about an 8 pip risk at that moment. So pretty good position to be in, and I can be patient for this, up and down